We may not need to be that concerned about a global trade war, as there is an emerging risk that is potentially a bigger threat to global economic growth than tariffs. While the International Monetary Fund (IMF) cut its global growth forecast for the first time since 2016 on the back of the US-China trade war, it's the hardware hacking scandal that has the potential to hurt ASX investors more, in my opinion. There are allegations revealed in Bloomberg that Chinese electronics manufacturers are planting tiny chips into devices, such as motherboards, that would allow its government to intercept sensitive. We may not need to be that concerned about a global trade war, as there is an emerging risk that is potentially a bigger threat to global economic growth than tariffs. While the International Monetary Fund (IMF) cut its global growth forecast for the first time since 2016 on the back of the US-China trade war, it's the hardware hacking scandal that has the potential to hurt ASX investors more, in my opinion. There are allegations revealed in Bloomberg that Chinese electronics manufacturers are planting tiny chips into devices, such as motherboards, that would allow its government to intercept sensitive information. If you thought this cloak and dagger issue is confined to cybersecurity and spy agencies, you'd be wrong. The fallout is much wider, as Western customers could stop buying Chinese-made IT components. I suspect this will be a much bigger blow to the Chinese economy than Trump's trade tantrum, as China is the world's largest electronics manufacturer and the industry is worth circa $250 billion, $350 billion a year, according to IBISWorld data. Any large cracks in the Chinese economy will be painfully felt by Australia, given our trade reliance on China. What's worse, this risk is not priced into our market. The problem with hardware hacks is that it's a lot harder to detect, and is probably why Australia, on advice from the US, has banned Chinese telco Huawei from supplying any equipment to the upcoming 5G network build-out. To be clear, these are just allegations and nothing has been proven. US tech companies such as Supermicro Computer, Inc. have denied there's a problem with its hardware, which is made using Chinese subcontractors, although that hasn't stopped its share price from tanking. It is unclear how widespread this potential problem may be, or what other countries, besides the US, may be affected, but you can bet security experts will be kept busy for a long time combing through racks of servers. This is an emerging risk that Australian investors need to keep an eye on, as any sharp drop in demand for Chinese-made IT equipment will hit blue chips first, probably starting with our miners BHP Billiton Limited, ASX, BHP, and Rio Tinto Limited fully paid ord. SHRs, ASX, Rio. Other ASX darlings that rely on the Chinese consumer, like A2 Milk Company Limited, ASX, A2M, Bellamy's Australia Limited, ASX, Bell, and Blackmores Limited, ASX, BKL, won't be far behind, although I can't really think of a safe place except cash to park capital if China's economy slows much more than the market is expecting. Top 3 ASX blue chips to buy in 2018. For many, blue chip stocks mean stability, profitability and regular dividends, often fully franked. But knowing which blue chips to buy, and when, can be fraught with danger. The Motley Fool's in-house analyst team has poured over thousands of hours worth of proprietary research to bring you the names of the Motley Fool's top 3 blue chip stocks for 2018. Each one pays a fully franked dividend. Each one has not only grown its profits but has also grown its dividend. One increased it by a whopping 33%, while another trades on a grossed-up, fully franked dividend yield of almost 7%. The names of these top 3 ASX blue chips are included in this specially prepared free report. But you will have to hurry. Depending on demand, and how quickly the share prices of these companies moves, we may be forced to remove this report. Click here to claim your free report. Motley Fool contributor Brendan Lau owns shares of BHP Billiton Limited and Rio Tinto Limited. The Motley Fool Australia owns shares of and has recommended Blackmores Limited. The Motley Fool Australia owns shares of A2 Milk. We fools may not all hold the same opinions, but we all believe that considering a diverse range of insights makes us better investors. The Motley Fool has a disclosure policy. This article contains general investment advice only, under AFSL 400,691. Authorized by Scott Phillips.